Welcome back to another update much later today. It's about 11:17 a.m., close to noon Pacific time, the 29th of October, Thursday. It's a pretty slow news day. I mean, I'm looking at all the articles and I don't think there's much worth mentioning. I did see this gold standard news, little highlight from Kitco. Gold standard is coming, so brace for monetary reset. Excessive monetary stimulus, a byproduct of an undisciplined fiat monetary system, will create problems for our economy as well as financial distortions, and the long-term solution is a monetary reset. Everybody's talking about a reset, folks. It's coming. I really hope it's a good reset. Like, debt's wiped out for everybody. Put these bankers back in their place and get rid of them. Get rid of these central banks. My fear is the reset is going to look much more like central bank digital currencies have become legalized. Your paper money becomes worthless, and the government starts sending different demographic groups different amounts of money digitally based on quote-unquote oppression of the past. That's my fear about the Great Reset. Unfortunately, I'm not thinking it's going to end up being a good thing, but let's see what the article says. The long-term solution is a monetary reset, whereby economies move away from the system and re-adopt a gold standard, said Jan Nujs, whatever, that looks like very Scandinavian name, gold analyst at the Gold Observer. There are a lot of financial bubbles, there are excessive debt levels, inequality is rising, you've got moral hazards. All these side effects of a fiat money standard are not really what we want, and eventually we get a lot of monetary instability. And I think then, at that point, we have to go back to a gold standard. I agree. Let's go back to a gold standard. The transition from the current monetary system to a gold standard has to first address the debt overhang in our economy. The main problem we have in the economy right now is the massive debt overhang, predominantly in the developed nations. Government debt, but also corporate debt and private debt just is very high. It's at record levels. He said a potential gold standard could take several forms. Quote, there are several options for a gold standard. You have the classical gold standard, but you also have a gold price targeting by central banks, he said. If you get gold price targeting, the only thing the central banks would do is target the price of gold, and that would be their monetary policy, he said. A gold price targeting mechanism differs from a classical form of gold standard, which would allow a direct conversion of fiat notes to gold. Currently, countries around the world are on a race to the bottom with devaluing their currencies, and this gentleman said that this is an attempt to raise inflation rates and indirectly reduce the value of debt still in the economy. Devaluing against other nations can be beneficial sometimes, but what they actually want in the US and in Europe, but also in Japan, is consumer price inflation, and preferably with interest rates at or below zero, deeply negative real interest rates. This would wash away and lower the debt burden. On silver, he said that the white metal should be considered a currency more than a commodity due to its high stock-to-flow ratio, and therefore analyzing supply and demand is not useful for predicting prices. I certainly do like when people are talking about a gold standard. I think it's great. That's the kind of reset I'm talking about. I'm really scared it's not going to go that way. And since we're talking about gold, it is slipping. It's down. It's 1866. This is the kind of stuff I like to see if I'm going to buy. I want it to continue further. I'd like to see it get below 1800, and then maybe silver below 21, and I'm going to buy. We're talking about prices now, so we might as well talk about Bitcoin and cryptocurrency prices. I'm also going to pull out my exchange on my phone. Oh, I just got a notification. Apple is up 5%. That's nice. There was a big dip yesterday, guys, in the stock market. Today, I have recouped almost all of that. So that's nice. Everything seems to be looking good, including the S&P 500. It's weird getting a call on dial pad. That's definitely some kind of telemarketer. I don't take calls on dial pad. The Dow Jones and NASDAQ and S&P 500 are all up. My portfolio is up, almost recouped all of the losses from yesterday. Bitcoin is doing well at halfway there to 14K from 13K and $13,470. Ethereum's doing nicely. The rest of the market, not so much. Not really fluctuatingly bad, and I don't really care. And just kind of scrolling here quickly to see if it's worth mentioning anything, because we did see some big pumps recently. Year in finance down so far. My goodness, since I started doing these videos, this coin is $11,200 now. All these people who bought it at $40,000, I'm so sorry. So sorry. Alway was the one that pumped really hard recently, and it is down now bigly. And I tell you, this is what's going to happen. It usually does. I did want to bring this up. It looks like it's an opinion piece. Maybe by Changpeng Zhao. It is. It's directly by the CEO of Binance. So he's written this piece and he has published it on CoinDesk. Let's read that. Binance is the biggest centralized exchange in the world. It's now illegal to use it, I think, unless you use the US version of it or something in the United States. But it was the place you would send all the Bitcoin you bought on Coinbase so you could buy all the other stuff. Everything's available on Binance. DeFi, or decentralized finance, finally found its footing this year, with numerous DeFi tokens and protocols gaining widespread traction amongst crypto users. Powered by smart contract technology, Ethereum, innovations like yield farming have allowed everyday users to earn unprecedented interest on their crypto assets. DeFi is booming, and today the market is filled with all kinds of borrowing and lending protocols, many of which compete with one another on the basis of providing users with meteoric yields. It's not uncommon to see protocols advertising double or triple digit interest rates, a far cry from the 0.5% interest rates commonly seen on so-called high-yield traditional savings accounts. While many of these protocols will prove to be unsustainable, make no mistake, look back in a few years and it will be clear this emergent wave of protocols have set larger forces into motion. Today's most promising DeFi apps all share a similar vision for the future: the creation of a divergent financial system where capital and data inflows more equitably, shifting control away from institutions and towards the individual. I love it. This article is actually really, really long, so I'm not going to read the whole thing. I don't have time. It's on CoinDesk. Let's just pick out any quotes and see if it's worth mentioning. We believe the future of industry relies on decentralization, and if you know Binance, you know that they actually have I think it's in beta, but you can go and you can play with their version of a decentralized exchange. They have one. I haven't played with it in a long time, but it's there. You can go use it. So if you really want to trade the true DeFi way, by the way, this article is definitely not as long as I thought. Sorry, did they trick me? Let's see if there's anything in conclusion. It seems we've already reached the turning point when it comes to DeFi adoption. After all, the enduring appeal of financial self-custody and decentralization are central to the original promise of blockchain technology. I agree, man. It's cool. Keep buying Bitcoin and Ethereum, guys. You want to be into DeFi? Ethereum is where it's at. You don't need to go into all these other protocols that are going to be worthless, dude. It's just too hard to see which ones are going to be winners, if any at all. I'm going to stop there. Have a great day, folks. We'll see you soon.